Hey everyone, how's it going? Today, let's do another quick education video on how to analyze the market from scratch. So I made these videos before where I got overwhelming response about how I break down the market. So I'm going to give you guys another easy, simple steps to follow how to break down the market and analyze the market from scratch. So I have listed out a bunch of kind of steps by step what we can do to analyze the market in order to find out what the market might do in the next move. So first thing first, we're going to utilize multi-time frame analysis and point of view, right? So top-down approach. This is always kind of my go-to kind of option, go-to kind of analysis way. So we're going to take a look at a few examples here. So utilize multi-time frame analysis and point of view. So we're going to always start from a higher time frame. Right, so higher time frame here on Aussie dollar, we can see that first we want to identify the impulse phase and the correction phase. So what is the current impulsive phase right now? If you look at the higher time frame here, well, we can see that this is a really strong impulsive phase to the downside, and there is a clear corrective phase right here. So we can identify that this is the impulsive phase, this is the corrective phase. And what is the latest impulsive phase? Well, clearly this is the latest impulsive phase. And we can kind of pinpoint the next correction as we can see another kind of bearish flag continuation. So we identify the impulsive phase, we identify the corrective phase. And we're going to identify whether the correction is continuation or reversal. And in this case, we can clearly see the market had this head and shoulder pattern, had this bearish push down, bearish continuation, another bearish push down, and this is clearly another bearish continuation that is likely to push down the price down to the next previous low. So all that is satisfied. Now we have a bias on the higher time frame, and our bias should be looking for sell setups as how the overall market is bearish. Now the last one is going down to the lower time frame for confirmation and entry. So when we have that higher time frame bias, now that all we have to do now is go down to the lower time frame here and identify setups that is actually valid that fits our plan to enter. So you can see here, if we're going to pinpoint that same bearish continuation that we point out on the higher time frame, well, look at where the price is at when we hit the top of the overall structure. You can see that over here, there is a short-term lower time frame double top. You can see that this is a double top here where price basically broke above, but no continuation to go higher. Instead, what we get is a clear head and shoulder pattern, and the price is pushing down. It looks like there is another consolidation looking to push the price down further. And that's how you're going to analyze the market from scratch. Again, starting from the higher time frame down to the lower time frame, and lower time frame here is looking for confirmation and entry. And the confirmation is going to be some sort of bearish reversal that satisfies your overall bearish bias. And if there is entry available and you're looking for an entry on the lower time frame, because you can maximize your overall higher time frame bias with a lower time frame entry, and you can potentially maximize your risk reward. So let's take a look at a few more examples here. Let's start with Kiwi dollar. So again, utilize multi-time frame analysis point of view, top-down approach. So what do we see here on the latest bit of Kiwi dollar here? Well, we did overall have this bearish push down, bearish correction, and bearish push down. So this overall is a larger structure that you can see in the making. So impulse, correction, impulse. Now, identify the impulsive phase, right? So this is clearly the next impulsive phase or the latest impulsive phase. And you're trying to, again, identify the corrective phase, and you can clearly see here on the higher time frame that there is a consolidation going on. So very, very similar, like Aussie dollar that we just went over, a bearish flag that typically that we see in the market. And next, identify the correction is continuation or reversal. So in this case, we see bearish push down, bearish correction, bearish push down, and then another bearish continuation. So we know that our bias here on the higher time frame is likely to be a bearish point of view. And now going to the lower time frame, again, looking for confirmation and entry. So we go down to the lower time frame, and the same structure that we see here on the higher time frame that we can try to pinpoint here. And again, our job here on the lower time frame is to look for confirmation, and confirmation should be some sort of lower time frame price action that satisfy the higher time frame point of view. So you can see it's very clear, similar structure like Aussie dollar. We have this previous high that the price was at. Price again broke the high here, but no continuation to go faster, or sorry, go higher. Instead, we see this bearish reversal head and shoulder pattern with the double top here, with the bearish kind of structure here, and the higher time frame bias in your favor. So all that is a line up, and basically looking for entry here. You can see that there is a smaller lower time frame bearish correction here. So if you were to look for entries such as this, you would put the entry order here, stop loss above the high of the correction. You're looking at the previous low as a potential target. So you can see that giving you a pretty decent risk reward, about 4.48 to 1 or so, just even down to the bottom of the structure. And if we see what the higher time frame is doing, there is certainly more downside available if this correction complete and the price just pushed down more and more. Now, let's take a look at multiple more examples. And Aussie yen here. So Aussie yen here, again, identifying the multi-time frame point of view, higher time frame. What do we have here? Well, we kind of have a double top here. And what's clear to me is that we are seeing this head and shoulder pattern on the higher time frame. So very clear head and shoulder pattern, and that is a higher time frame structure. And you can see that there is a strong bearish push down and then a bearish correction in formation. So to me, my overall bias here is looking for a downside point of view. Now, if we go down to the lower time frame here, so again, lower time frame is looking for confirmation, looking for entry. So we know that the higher time frame had the bearish push down, and we know that the higher time frame has a continuation price action because of that head and shoulder pattern. So all that really satisfies everything that we want to see on the higher time frame as a bearish continuation. So lower time frame now, again, looking for confirmation and looking for entry. So what we have here is we have a kind of a ascending structure like we did have a bearish push down, and originally looking like this was a continuation to go down further, but you can see price didn't really continue after this point of view, and that just shows you that this overall correction at the time just wasn't enough to start pushing down the price like what we expected from a higher time frame point of view. Instead, what we have here is a pattern involvement, right? So we have a smaller correction and we end up building a bigger correction here, and then end up evolving the structure to a expanding structure, but the bearish point of view doesn't change, right? This is still a bearish correction. It was once a smaller correction, just evolved into a bigger one. But again, the higher time frame bias doesn't change. The higher time frame bearish point of view doesn't change. And now the confirmation is met. And in terms of entry, I think there is a few entry available. This is the personal entry that I personally got, looking for the sell here, putting the stop loss, put the entry order below the correction and stop loss above the high, and you're looking at a potential target down to the next swing low, whether it's this swing low here or the bottom of swing low on the higher time frame. So very good risk reward here if you were catching one of these trades, even down to the bottom of that right shoulder here. So a very healthy reward if the trade does play out. So that is Aussie yen. Let's move on to a couple other ones. Kiwi yen is going to be the similar idea. I'm going to go a little bit faster here. So you can see that similar head and shoulder pattern that we see on the higher time frame. And we also have this expanding structure here. So again, higher time frame point of view, top down approach. What do I see here? Well, after this bullish move up, and we start forming this expanding structure. And if we look to the left here, we do have a potential high where the price basically rejects this previous high here, and bearish move down here, and again, potential bearish continuation price action. So identifying the impulse phase, correction phase, which we did, and identifying whether the correction is continuation or reversal. So in this case, we know head and shoulder is a bearish reversal, and we also have a bearish impulse, bearish correction as a continuation to push down the price more. Going down to the lower time frame now. Lower time frame here, if we just pinpoint the structure, what we see here. So not only we see this ascending structure like, we also see that the price pushed down impulsively. Again, we did have this continuation price action looking like it was going to go down more, but it kind of started recovering more. And again, it's very similar like Aussie yen, because all this is telling you that this smaller correction just wasn't enough to push down the price. Now we just evolve into a bigger structure, but nothing changes from that higher time frame point of view, because the impulse is still on the lower time frame. The confirmation of this expanding structure is very valid, and now all we have to do is looking for entry once again. And you can see there's a few entry possibility if you're looking for a breakout entry such as this, and you're looking for, again, down to the previous low for a potential target, or down to the bottom of the higher time frame right shoulder for a bigger risk reward. So let's take a look at a couple other markets. So if we look at the indices market, it's going to be very, very similar, right? So again, higher time frame point of view, what do we see on the higher time frame? Well, we've been seeing this recovery, so to speak, since the coronavirus crash. But at this latest bit of the price, we start getting moving a little bit of sideways consolidation. And this is all good because all we can pinpoint now is that there is a descending structure in the point of view. And again, higher time frame bias looking like that. This is a corrective phase on the higher time frame. And whether or not the correction is continuation or reversal, well, as we know, these kind of structures are ascending structures that are bound to have a higher probability of a reversal type of point price action. So my bias here on the higher time frame is looking for a reversal. And now if we go down to the lower time frame now, this is the lower time frame now, and we're looking for confirmation and entry, right? So again, we're going to look for that previous swing high as a double top. You can see price broke the double top, but no continuation. This is always an important part of the price where it gives you kind of a indication that the market isn't going to go higher after breaking the previous high. And we start getting this head and shoulder pattern. We did push down here. And what I like about the lower time frame here is we kind of consolidate here a little bit more, and we form a more slanted head and shoulder pattern, and this was the entry that I personally got in as well. So if you were looking for entry such as this, you can easily put an entry order such as that, and then you're looking for the swing low of this price, right? So you're looking for either down to the low of here, and a very, very good risk reward if this plays out on the lower time frame. So lower time frame confirmation is met, and lower time frame entry is there, and everything's satisfied of the higher time frame point of view. Now let's talk a couple other crypto market now just to show you guys that this the way how to analyze the market can work in any market, any time frame. So if we start from crypto here on the total market cap, what do we see on the higher time frame here? Well, this is the previous higher time frame all-time high, and we can clearly see that this is again price did not continue after breaking the previous high. And right away I see another structure here. So this is the ascending structure point of view. So we know that again ascending structures are a bearish reversal. So right away on the higher time frame, identify top-down approach, identify the impulse and correction phase, identify that this is a corrective phase after hitting the double top here, and price is likely to have a bearish reversal. So we know that it's a reversal correction that we're seeing. So my bias here is looking for the sell setup. And now if we go to the lower time frame here, lower time frame again looking for confirmation and entry, right? So we know that we have that previous double top here. We know that there is ascending structure in the making, and now we're looking to see that there is also a head and shoulder pattern that basically shows you that this is likely to be a bearish reversal. And we can see from here that we did get this overall right shoulder here, and price did push down out of this ascending structure here, and we did also form a continuation price action. So not only we have the head and shoulder, we have the impulsive phase breaking to the downside, and we also have a bearish continuation, and we break out and then continuation here. So if you're looking for entry, this is a clear kind of correction after breakout entry, and this could be something that to look for the previous low as a potential target for a very healthy reward. Last I want to go over UK oil. So another commodity type of looking a price action here. So again, start from the higher time frame, identify the impulsive phase and corrective phase, and we know that this last bit of the price is rather corrective. So we're going to pinpoint the structure here from swing high and swing low, identifying that this is a corrective phase point of view. And if we look at the lower time frame here, lower time frame here, after price originally impulsed down, kind of hitting the previous low here, but no continuation to go lower. Instead, we had a bullish reversal, right? So we can see that bullish reversal, kind of a bullish continuation price action, and price is pushing up as we go, right? So you can see in this lower time frame move, there are many lower time frame continuation and lower time frame correction, lower time frame continuation, correction, continuation, correction, and continue to push up the price. So again, satisfy all these conditions, right? Start from the higher time frame point of view, identify the corrective phase on the higher time frame, identify that this is likely to be a corrective reversal price action, and we're moving up to this previous high here. And it's very important to see what the price would do when it reached this high, because just like all the examples that we just went over, when the price is in this larger higher time frame correction, we know that we have a stronger bias of potentially price reaching the high here that can potentially sell, and we're going to be a little bit uh, more on the monitor side of things to see whether the price will react to this previous double top as a potential reversal, and we're going to wait and see what the price is likely to do when it does reach this high here, and whether or not we're going to form lower time frame reversal, because if it does, it's going to give us a confirmation, and if the price does push down, followed by consolidation, and that is going to be our entry right back to sell back to the low. Okay, so to recap everything, if we go back to the euro dollar example here, to recap everything, we're going to start from the higher time frame, and we're going to utilize multi-time frame analysis and point of view, so top-down approach. So looking at the price here, what is the impulsive phase? Well, we just had this latest impulsive phase to the downside, right? So we know that that is an impulsive phase, and when the market start correcting in this form, you can see that this is a corrective phase. So impulsive phase, corrective phase. And whether we have to identify whether the correction is continuation or reversal. And this is the a very tricky part about the price is if we look at the lower time frame here, typically, when people trade support resistance, when price breaks this previous high as a resistance in their point of view, they're usually right away to jump in on the buy. But the way how we see the market is we're going to wait for the confirmation on the lower time frame, right? So even if this impulse has happened to the upside, but if it's not followed by continuation price action, then it's very likely that this is just a false breakout, so to speak, chopping the trader trying to go long, and then if we start having reversal on the lower time frame, that is the confirmation that satisfied the overall higher time frame bearish point of view. So you can see price did break above this high, but do we have continuation right now? We really don't see any continuation, right? Price push up, smaller another correction push up, but this overall price does not show us that this is likely to go higher. Instead, what we're seeing here is likely to be a bearish reversal. So we have to adjust the structure. We have to basically, instead of the structure looking like this, we're adjusting the structure now looking more as a bearish kind of flag, bearish kind of continuation flag that satisfies the higher time frame point of view. And now if we do get some sort of bearish reversal, maybe a small head and shoulder pattern or some sort of bearish action here that shows us that there's going to be a bearish continuation on the lower time frame, and all that will satisfy what we're looking at the higher time frame and looking for a next sell here on euro dollar. Okay, everyone. So hopefully that this video or quick breakdown gives you a little bit better understanding of how I personally analyze the market from scratch. And again, following these simple steps that will help you to analyze the market a little bit easier. So any question, comment, feedback, welcome to let me know, guys. And if you like these videos, feel free to let me know below, and I will make more of these for the future. So thank you very much, guys, and have a good weekend, everyone.